let's talk about the elephant in the room, which is foreign investors. They've remained net sellers for 33 consecutive sessions. I'm not sure if that is a record, but I'm sure it is of some kind or the other. Will they continue to sell, or will the tide change? Why are they selling? What is the view out there on when the tide could change? Mihika has put together this report. Yes, Mihika.
Thank you, Tamanna. You know, something that's been adding pressure to our markets amid a very weak Q2 season across many sectors has been foreign portfolio investors, and they have remained net sellers, like you said, for 33 consecutive sessions. Now, this has led to a total outflow of 1.5 lakh crores from Indian equity markets. Now, 2 months of consecutive selling, when we see November 2024, we've seen 21,000 crores worth of outflows so far, and in October, we saw 94,000 crores of outflows from foreign portfolio investors. Now, why are FPIs selling? Well, 2 reasons. First is the China stimulus package, which triggered a tactical outflow from India, according to experts. And now, because of a fund reallocation, these funds are now being allocated to China from India. The second factor is the impact of the US elections. Now, the Republican win has led to rising US bond yields and the dollar, and better US market performance have been leading to emerging markets outflow. Now, investors are switching from Indian equities to US equities in anticipation of higher interest rates, and Trump's potential fiscal stimulus could drive up long-term interest rates as per experts. Now, when will FPIs continue to sell? Well, experts say that foreign investors are far from hitting the brakes from the selling spree and are unlikely to return to India in November. So we could see this sell-off continue till November, and India will continue to face continued capital outflows as the global sentiment around emerging markets continues to fluctuate. But fear not, the Indian growth story from a long-term view is still intact. According to Neelkant Mishra, the current price to earnings premium of 15 to 17% after the correction when you compare to global peers is now reasonable, and there is room for expansion. And optimism of experts comes around because of the 7% economic growth rate, despite the market volatility, and this optimism is led by factors like declining inflation and higher local investor participation, as retail investors are now realizing that the markets are from a long-term view.